Now, Kenyan legislators have slammed the voluntary plan by banks to gradually reduce lending rates. They're describing it as too little, too late, and unlikely to solve the problem. One of the main points of contention has been banks' continued unwillingness to provide differential pricing despite the availability of credit scores. Now, with Kenya's elections just a year away, is there a chance that a rate capping bill could become law, purely to score political points? These are some of the issues Ramah Nyang explored in a panel discussion earlier.
I don't think banks are taking on more risk than they ought to. I think the banks are under the impression they're taking more risk than they ought to because of the asymmetry of information. A lot of the conversation around this is about creditworthiness, and and this has been a theme that's been going on. And of course, many Kenyans don't know their credit scores. They don't know how to access them. They don't know how to use them. They don't know what it means. So when a bank is looking at a client and they don't have that body of information, that client could be an excellent borrower, but they don't know, or they could be a horrible borrower and they don't know. So what do? They lean towards the high risk. And so I think also, as the ability for Kenyans to get access to their creditworthiness and get a good sense of how to have a credit score and how to use that to negotiate loans, then banks won't be able to keep on telling us you guys are very risky. But that has to be balanced with the informal business management.
And we're going to come to you, Nderi, because I know we talked about this a lot on Twitter. But here's the part where a lot of us have questions for banks. CRBs have been in operation for the better part of the last 3 years in this market, and it's relatively straightforward. Yes, a lot of people may not know this, but it's pretty straightforward to get a credit score. I mean, you can literally do it on your phone these days, pay a nominal fee, and you know what your credit score is. So why do you guys still tell us that we don't have enough information to actually use credit scores to provide differential pricing of loans by default? I shouldn't have to come and ask you for that.
And the question could be asked even in the capital markets, because we've had credit rating for a while now. However, what does it mean to have a score of X or Y?
No, you've got a 700 score, which is, according to Metropole and a lot of the other CRBs here, is pretty good. So what's wrong with it?
But what does that mean in terms of, in Kenya's context, in terms of probability of default? If you go to a place like the US, you can be able to you'll be able to know what the probability of default is, and over, say, a long period of time, because they've been able to look at the variances and the variance of variances, and able to tell you with a lot of certainty that if you lend with somebody, if you lend to somebody with a credit score of X, then the probability of default is Y, and therefore it's easier to price. But in Kenya's context, we don't have that information yet.
There's an immaturity in the market that Kenyans are being very impatient about.
But how immature is this? And I asked you this yesterday. How much is enough? How enough is enough? Because you've got banks here that have been operating, in some cases even before independence. They've got access to reams and reams of historical information on default. They've got access to tons of information on income levels in this country. How do we not know how can we not make that link between probability of default and income levels?
I actually was a resource person for somebody who was doing a PhD in analysis of credit. They're trying to develop an early warning system for credit delinquency, when they jump out, And one thing that it was very obvious to us when it started out is that there was actually no information. So, and it's no different for banks, because the information that they do have is limited to what they have.
Do you think Uhuru Kenyatta will sign this? Yes or no?
I think he's damned if he will, damned if he won't. Because if he does sign it, the popular opinion will be against him. If he doesn't sign it, if he does sign it, the technical people will be against him. If he doesn't sign it, the populists will be against him. So he's got one side where he's got the Wananchi and the guy who's really bought into this populist rhetoric that the MPs have been pushing, that if you get lower rates, you'll be able to have money, grow your business. So there's that side. Then you've got the technical guys who are saying, well, actually, there are going to be ramifications that may negatively affect the economy. So he's in a very tricky position. I don't envy him.
Johnson? Will he sign it? Will he not sign it?
I don't know, but I don't envy him
Yeah.
for pretty much the same reasons she's put forward.